welcome you to the Federal Reserve, and I wish for you a productive and stimulating conference.
Chairman of the Fed saying basically to Washington, you've got to do something, and you got to do it quickly because the Fed only has so many tools. QE3, you haven't been a proponent of it. What do you think now? Do we hark back to the 60s, see the twist?
Yeah, so I would say if you'd asked me 2 months ago, 3 months ago, a month ago, I said there was a 0% chance. I thought there was a 0% chance you'd get a QE3 like QE1, QE2. But I also said that, boy, if the economy really starts to tip over, or the equity market goes down 15, 20%, I think they would think about it again. And so I would say today, I still think you'll see Operation Twist, but I could see down the road that maybe you do get, and I would say there's a third chance, and maybe you do get some liquefaction similar to QE1, QE2.
Do you still oppose a third round of quantitative easing?
I would say I wouldn't have, I would think you wouldn't do it, and you shouldn't do it because of the ramifications, including I think you created this bifurcated economy, you do drive commodity prices higher. I do think, though, and it's so much surrounding what happens in Europe, but I do think some form of coordinated monetary policy with Europe is potentially out there. And I could see, I don't think it comes on next week, but I think it could come in the next 2 to 3 weeks, especially if it's globally coordinated. It's hugely powerful. It's globally coordinated.
The Fed is downplaying the inflation risk right now. I'd like your take on inflation and how it impacts the decisions you make in the fixed income market right now.
Yeah, I mean, inflation is definitely, you think about where we are today versus where we were a year ago when the Fed did QE2. Inflation is higher. And it's definitely higher. Yep, and it is definitely, I think part of the reason why QE3 is so difficult is that you drove commodity prices up, you created more of a bifurcated economy, and I think that clearly has an impact, especially in the third and fourth quartile of Americans from a wealth perspective. So I think it's really hard, and that's why I think he doesn't want to go down that path.
So we're heading into a more inflationary environment, or are you thinking?
No, I think it's moderating. I think with growth as docile as it's going to be, not just in the U.S., but it's certainly developed world and with the emerging markets slowing, I don't think inflation is going to be a significant problem. It's, I would argue you're probably, and you're seeing it in other parts of the world, probably peaking at around these levels.
So how does that affect how you're making moves right now?
Yeah, I mean, we're willing. One of the things that you always think about if inflation picks up, you want to have less duration, you want to have less long-dated assets and fixed income. We're not as concerned about it today. I do think that rates will drift up, but very moderately. But I'm not that concerned about owning long-dated, especially if you get Operation Twist and the Fed's going to buy the back end of the curve, longer-dated assets. So I don't mind buying long-dated investment-grade, long-dated municipals, and having some duration in the portfolio. If we think inflation really bursts higher, which we don't, then we would be concerned about doing that.